Breaking news. On October 29th, 2025, Bank of Canada lowered its key interest rate to 2.25%. In today's video, I'm going to walk you through the recent Bank of Canada announcement so you know how this impacts you as a homeowner or buyer. Stick around till the end because I'm going to share my personal prediction if you're thinking about either buying or selling your home this fall. Let's dive in. So in today's video, we're going to break down the recent Bank of Canada announcement and this CBC News article. So the title of the article is Bank of Canada lowers key interest rate to 2.25% and suggests it's done cutting rates for now. So right here, it starts with the Bank of Canada lowered interest rates to 2.25% on Wednesday, but cautioned that monetary policy cannot fix the structural economic damage caused by the U.S. trade war. The central bank said it made the 25 basis point cut as weakness ripples through the Canadian economy and with inflation expected to stay close to the bank's 2% target. For many months, we have been stressing that monetary policy cannot undo the damage caused by tariffs, said Bank of Canada Governor Tiff McCallum during a news conference in Ottawa. The economy has been saddled with higher costs and less income as a result of the U.S. trade war. While the central bank's monetary policy can help the economy adjust to these circumstances, it cannot restore the economy to its pre-tariff path, he said. McCallum also suggested that if inflation stays in line with the bank's current expectations, hovering around the 2% target, the central bank will hold rates at their current level. However, if the outlook changes, we are prepared to respond, he said. The central bank also released its monetary policy report alongside its interest rate announcement on Wednesday, warning that the trade conflict is fundamentally reshaping Canada's economy. While the Bank of Canada is lowering interest rates to boost demand in the economy, it faces challenges in doing so, according to Claire Fan, a senior economist at RBC. If rate cuts stimulate demand in the Canadian economy, there is a risk that demand outpaces capacity to produce goods, thereby causing inflation, she explained. This is a Bank of Canada's interest rate chart from the last couple of years. So right here from October of 2023, interest rates on July 12, 2023 hovered around 4.75%. And right now, again, we're down to 2.25%. So weak growth expected. The bank outlined some of the economic conditions that influenced its decision to lower rates. First, Canada's economy shrank in the second quarter as exports dropped and business made fewer investments because of trade-related uncertainty. The labor market is still showing weaknesses and hiring has slowed, with thousands of job losses in industries vulnerable to the U.S. trade war. And because of the trade conflict is having severe effects on tariff-hit sectors like auto, steel, aluminum, lumber, GDP growth, it's expected to be weak in the second half of the year, the bank said. Responding to a question about whether the bank thinks Canada will avoid a recession in 2025, McCallum said that the central bank continues to expect modest growth. But he emphasized that whether the economy sees a slight pickup or a few quarters of negative growth, Canadians are not going to feel very good in either scenario. And right now, this is another chart of tracking Canada's economic health. Inflation in September was up to 2.4% from the 1.9% in August. Change in monthly GDP. In June, it was around 0.01 and it increased to 0.2 in July. The Canadian dollar was also up to 72 US on Tuesday. Unemployment is up to 7.1. Toronto Stock Exchange is down. Still, consumer spending has grown at a healthy pace, and it's expected to continue growing into the end of the year alongside real estate investment and government spending, according to the bank. Bank officials expect inflation to stay close to its target in the coming months and that inflationary pressures will ease as well. While weak economic growth is keeping price increases subdued, tariff-related costs for businesses are putting pressure on inflation, and the bank expects that two forces will offset each other. Rates are at about the right level. The bank said in its release that if inflation and economic growth evolve broadly in line, whether its current projections, It considers the current rate at about the right level to keep inflation on target while guiding the economy through a period of change. If the outlook changes, the bank could change course. Asked what kind of material changes the central bank would need to see, Macklem quipped, "I'll tell you when we see one." It's not 1 month of data that shows some shift yet. You need some accumulation of evidence that you're coming in below that forecast, enough that it actually changes your outlook of the future. Central bank officials seem to believe that for the time being at least, they have cut rates enough to stimulate the economy, said Robert Kavik, senior economist at Bank of Montreal. From here on out, in their opinion, it's kind of up to the fiscal policymakers to take the baton and support some areas of the economy that have been impacted by the trade war, noted Kavik. When it comes to direct fallout from the trade conflict, including job losses, further rate cuts aren't going to really do anything to help the situation in the really short term yet. So that's somewhere where fiscal policy would step in with maybe direct and targeted support, aka the NDP. Even as the bank indicates it could be done lowering rates for now, Kavik's view is that ongoing weakness in the labor market leaves the door open for the central bank to make another 25-point basis cut in early 2026. But for the very immediate future, they're not there, the economist added. The Bank of Canada will announce its next interest rate decision on December 10th. If you look at this chart on the screen regarding interest rates, you'll notice that the previous interest rate at 2.5% was in neutral territory, meaning it was having no positive or negative impact on buyer decision making. Now that the Bank of Canada has lowered its key interest rate to 2.25%, this brings interest rates into a supportive category. This will help stimulate the Abbotsford real estate market. Remember, beginning of the video, I talked about sharing my personal prediction about what this recent rate cut would have on buyers' activity for the Abbey real estate market. Here it is. I do expect with this recent rate cut, some buyers that were waiting or sitting on the fence, waiting to see what direction interest rates would head in, will get off the fence and will get serious about their home search in the next couple of months. So that could mean that we'll see an increase in buyer activity heading into next spring of 2026. As a home seller, I've been talking to a lot of sellers this year, and one of the key things that they've been telling me is this isn't the right time, or they're waiting until they have a clear direction with Bank of Canada before they make a major decision. So one thing that I predict heading into next year is we'll see an increase in new listings for detached homes here in Abbotsford and townhomes. Sellers that have been waiting on the sidelines for the last couple of years to downsize will now make a decision heading into next spring. Another group of sellers that doesn't get talked about enough is people living in a condo or townhome. These are folks that are looking to upgrade. And I think as we have a clear direction with interest rates, we'll see these folks looking to make a move as well. In terms of home prices increasing, I don't see home prices increasing in the short term, but over time, if market activity does pick up next spring, but this could help push home prices. But if you're someone waiting to see significant price increases that we saw during COVID in 2021 or 2022, we are a while away from those price increases. And if you're an investor, maybe this will finally help provide some confidence for you as well to make an investment here in the Abbey real estate market. Do you still have questions about how the Abbotsford detached market is performing? That's why you need to watch my next video, because I provide a complete breakdown of the Abbotsford detached market and the sub areas of East Abbotsford, Central Abbotsford, and West Abbey. Let me know your thoughts below about the recent Bank of Canada rate announcement. Will this have a positive or negative impact on your Abbey real estate market? I'm Gary Dhindsa, and I'll see you next week.